Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka.
And I'm Yatin, Mota.
Yatin, what a seesaw session it turned out to be for the markets. At one point, we broke below that crucial support zone of 21,500 mark. But look at what happened in the second half of the session. The entire complexion of the market changed. Just like yesterday. Yesterday, things went south. Today, things went north, given the fact
just
that...
like your jacket, you know, it was red yesterday and it's green today.
Okay, I don't really remember what I wore yesterday, but good that you notice. But fine, I'm wearing green today, and of course, that color is, rubbing off on the market sentiment because we managed to end at the day's high above that 21,600 mark. Of course, Nifty Bank yesterday, that was the culprit that dragged the market down. Today, a 400-point recovery from day's low on the Nifty Bank Index managed to pull the indices up, and in fact, the Nifty Midcap Index also managed to recover nearly 1% from day's low. Aside of that, if you look at the advanced decline ratio, almost at 1:1, VIX has cooled off further. And aside of the Nifty Bank Index, what did well today was, the entire media pack, metals, of course, banks, as I mentioned. IT as a pocket has been quiet. Of course, tomorrow is when we see numbers being kicked off, third quarter numbers from the likes of TCS as well as Infosys. And then Friday, we will have the likes of HCL Tech and Wipro also reporting numbers. We'll be talking about the IT stocks in greater details. But aside of that, what didn't do well today, once again, FMCG was a laggard. Realty came under profit booking. Energy was another pocket that was a laggard today. What did well on the Nifty? Cipla. That stock was a top gainer, 3.5% kind of gains coming in. Reliance Industries, Yatin, 2.5% kind of an up move at the day's high. Adani Ports as well, among the gainers. HCL Tech, this is touted to be the outlier when it comes to IT earnings this quarter. And, the stock is up and about. Tata Motors, of course, also ended in the green. On the flip side, you had the likes of ONGC, Divi's Lab, NTPC, BPCL, Coal India, all these stocks under pressure. But Yatin, from the broader end of the markets, I think Cochin Shipyard is up 20%, and also the Network 18 and TV 18 group stocks have hit fresh 52-week high today.
Yeah, but we can't really comment on Network 18, TV 18 because, Moneycontrol and CNBC Awaaz both are, the operational channels and, multimedia businesses of the group companies. But yes, media stocks have been doing well. As far as, the broader markets are concerned, Nandita, a lot of stability. In fact, when the market was weak, we had the broader stocks which were doing well. In fact, today, stocks like IRCTC, IRCON, in the railway space were doing well. When it comes to Cochin Shipyard, that stock was doing well, almost 20% higher. Olectra, TANLA Solutions. And, TANLA, there is a new board member which is, being appointed. He's the ex-chairman of TRAI. And, that probably adds value in terms of the news as well as the stock price. When it comes to stocks like Delivery, NLC India, Glaxo, AstraZeneca Pharma, all of these stocks are doing well. In fact, multinational pharma companies like AstraZeneca as well as Glaxo have moved almost 20-25% in the last few days. In fact, AstraZeneca also moved nearly 20% in trade today. So all of these stocks doing well. So is the case with Yes Bank. That stock moved above that 25 rupees mark.
All right, those are the movers from the mid-cap end of the markets. But Yatin, on that note, let's take a look at the stocks that are on our radar this afternoon. And it's, prudent to talk about the IT stocks, given the fact that we have the numbers, big numbers coming in tomorrow. The Q3 earnings season is being kicked off by the likes of TCS and Infosys. And, if you look at the entire IT pack, the stocks have run up quite a bit. If you compare from last year, the Nifty IT index is up over 20%, despite the fact that there has been no change in the demand environment. Nothing really has changed on ground when it comes to client budgets as well. But stocks have run up. And, if you look at particularly the third quarter, it is expected to be a weak quarter once again. Seasonality will play spoil spot as well. Higher furloughs as well as weakness in discretionary demand is something that will continue to weigh in on the numbers. 4 out of 6 large cap IT firms are expected to report a revenue decline on a quarter-on-quarter basis, barring HCL Tech and LTI Mindtree. If you look at the margin picture, Infosys and Wipro margins may decline because they have announced wage hikes in the quarter gone by, and also amid higher furloughs, right? When it comes to the guidance front, Kotak and Ambit expect Infosys to to cut FY24 guidance to 1 to 2% vis-a-vis 1 to 2.5%. So upper end of the guidance may be cut by 0.5% or thereabouts. But, it's the commentary on demand environment and the future outlook that the street will be keenly watching out for. If a guidance cut really comes by from Infosys, it will be the third guidance cut in this financial year. If you look at the deal win picture, of course, we know that Infosys has said that a major deal, a potential deal worth $1.5 billion with a global client that was announced in September has been cancelled. The street will be watching out for more details because we don't have any details as to what or which global client has cancelled that deal. So some color on that front as well is something that the street will be watching out for. For the IT pack as a whole, there'll be fewer mega deal wins because the announcements have dried up, and that's why on a quarter-on-quarter basis the deal win figure could be subdued. Aside of that, as I mentioned, client budgets, demand revival, these are some of the things that will take center stage. And any green shoots in laggard sectors like BFSI, telecom, high tech, that is something that the street will be really watching out for. As I mentioned, HCL Tech and LTIMindtree, these are the two companies that may buck the trend in the quarter gone by, given the fact that HCL Tech may benefit from the Verizon contract, the ASAP acquisition, as well as seasonally also the products business sees some bit of strength in the third quarter. LTIMindtree had already outlined or said, guided for rather a stronger second half. So we'll see Q3 to be similar to that of Q2, and in Q2 LTIMindtree had reported great set of numbers. So yeah, that's something that we'll be watching out for. But also another thing that will gain center stage this time around, Yatin, would be the whole poaching row with Cognizant, right? Because Wipro and Infosys have been engaged with Cognizant over unethical poaching of employees. Of course, especially after ex-CFO of Wipro, Yatin, Dalal, he joined Cognizant right after exiting Wipro. So yeah, all these factors will be watched out for keenly when it comes to IT earnings.
Absolutely, and I think Nandita, the hiring numbers also will be watched out for, because in the last quarter we saw the hiring on a net basis being negative. So yes, the trends of the IT stocks will be keenly watched out for. But one stock which is on the brokerage radar is Tata Motors, and now the stock is at record levels. If you look at JLR, the cash flows that are expected to be getting generated over the next few quarters have been quite robust according to brokerage estimates. Now CLSA has a buy call on Tata Motors, and the rationale behind CLSA's buy call is that from here on there could be a significant up move in the overall cash flows of the company. Now if you look at CLSA, they have a target of nearly 955 on the stock, which means that the current market price offers a near about 20% upside from the current levels. UK, Europe and China will lead a significant amount of volume growth for Q3 according to CLSA, and the Q3 volumes have already jumped nearly 27% year on year. Now if you look at the JLR margins, they have been increased to a level of 8% on the EBIT side versus 6% earlier for FY24. However, by FY26, JLR is expecting that the EBIT margins would go to a level of 10%. And if that happens, really, we could see a large amount of free cash flow generation from this particular unit of Tata Motors. Obviously, the electric vehicles business is also doing well in the domestic market. CVs are also pretty much in shape in terms of market cap, in terms of market share, as well as the overall pricing regime. Right now, not much of discounting seen in that particular space. So Tata Motors is one stock in the auto space wherein brokerages are becoming more bullish than ever.
That's correct, Yatin. It's zooming towards the 1,000 rupee mark now. And of course, also, important to note that Tata Motors has announced on the sidelines of the vibrant Gujarat summit that they will be setting up a lithium ion factory for EV batteries in the state of Gujarat. Of course, that was Tata Motors for you, but the next stock on my list is Delta Corp. Of course, the game is still not over, Yatin. The numbers are pretty bad. A 60% drop in profit, on a YY basis, but the stock managed to recover very smartly from the day's low and ended higher by about 3% or thereabouts. As I mentioned, margins also, contracted quite a bit, 1300 basis point contraction on margins on a YY basis. Of course, the October-November quarter was impacted by higher GST. Revenue slumped as customers had to pay 28% GST upfront, on chips rather than on the gross gaming value, and that discouraged customers. And because of that, of course, the company was forced to come up with the promotional offers that impacted bottom line as well as margins as well. But the company is hopeful of a revival in the fourth quarter. GST show cause notices, the case is likely to be heard next month. That will be crucial. But the other factor that the market is really focusing on is the fact that the company has already made a foray into the realty space, and today the management was on CNBC TV 18 and said that, the opportunity to scale up the casino business in India is fairly limited. And, because of that, they may be looking at a pivot to the realty business. And that if that happens, of course, that will come as a big boost, because the company has already forayed, as I mentioned, into the real estate business via a JV with Peninsula Land, wherein it has, invested somewhere around 99 crore rupees, right? But the entire outlay of the JV is expected to be 250 crore rupees, and Delta Corp will have a majority stake in that. So, all in all, the stock recovered, but numbers weren't really encouraging. But going forward, we'll have to see how the entire GST issue pans out, and that will decide the fate of Delta Corp, Yatin.
Absolutely, and Delta Corp, I think the market will focus more on the GST issues and the kind of notices that they have received from the GST department with respect to the revenue recognition of the gaming business. And Nandita, currently these companies give a bonus on the chips that you purchase in the casino.
Yeah.
And that is probably led to a margin decline as well as a revenue decline. So a double whammy is what we have seen for all of these casino companies. Let's see if the court really gives them relief for the GST notices which they have received so far.
All right, that was about Delta Corp, and those were all the stocks that we had on our radar this afternoon. But of course, if you have any comments, leave them in the comment section below. And of course, come back and join us tomorrow morning at 8:30 a.m. When I come back with Morning Trade, and we'll be taking up all your stock-related queries as well. Big day tomorrow, 2 major earnings slated, but they will be coming in post-market hours, but all eyes will be on TCS as well as Infosys. But on that note, it's a goodbye from me and Yatin. Thanks a lot for tuning in. Stay tuned to Moneycontrol for all your other news and updates.